Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.isc.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Case in point here, we can look at the EUI, which is the U.S. versus the Euro. Now, again, this was taken yesterday. We closed at roughly around 75.86, so just in and around this level in here. We kind of broke this key pivot. But the fact is, if we go right back to this topping area here, we can see that we saw our prices play into this level up and around the 81. We saw them reject and play down into 77. You'll notice here that we played back up into this range, and then we rejected back down. And so by recognizing this, we can now establish some very key support and resistance levels. And those support and resistance levels become extremely important for establishing our objectives as far as our trades are concerned, because we know that unless in the bigger picture, unless the market breaks this resistance level, we're not going to see any continuation. Now, we can take a short-term play off of a support, but we have to recognize that as we trade into these higher levels, that this level right in here has to be an area where we start assessing our trade and locking in our profits, or else we run the risk of course, seeing what happened here, which is a breakdown. Now, if you're somebody that did not lock your profits in here, by recognizing this support and witnessing a break below that, you have to understand that this is just like that bathtub on the upper floor of an apartment building, and as we start dropping through floors, we have to be looking at these lower floors. Now, how did we establish support here? Well, we went back and we said, okay, we saw prices play into this high, we saw them play here, we saw them consolidate here, so this looks like a key area where if we're going to see support at a lower level, it's likely going to come into here. We saw a little consolidation, but a break below that, again, opened up a play down into here, which we slice through, and so on and so forth. So what happens, of course, is as we finally establish a bottom, these previous supports become resistance. And now, with a break below this level here, we can say with a reasonable amount of probability that we're likely to test this support level. And so you guys can put this on your price charts, and let's see how this plays out. But we've already had a break above, again, by no means a trade recommendation, but we've had a break above this level. So the key is this now represents the next ceiling where we could see some, we will likely see at least over the shorter time frame prices migrate to, and it becoming a very key sort of now resistance level in the bigger picture. Again, Steve, if there are any questions you want me to address as we move forward, just let me know at this stage, and we'll go from there.
I guess one question, because I get this all the time, Jace, is that, you know, if you're looking at that first support area and you sort of maybe, you leave your stop loss or whatever, you're too long EUI, when would you know you're wrong there? On that, where you sort of denoted by that X or the circle? What would you say at that point?
In this case here with the break, and it's a little tough, we had a gap down here. But, watching prices, again, if I went long here off a break of that support and I neglected to take any profits, at the very least, guys, from a trade management perspective, I want to make sure that, let's say I started off paying $1 for my contract down here for an EUI call, it might be 3 months out, and I paid $1 for that. Well, initially, I'm going to start with a stop that I'm comfortable at, and I may be prepared to give up, say, 25 cents of that $1 per contract. Well, as I now trade from 77, 78, 79, which is it's a pretty significant move from a currency perspective, that dollar that I originally invested has now increased in value. And I have to step back and say, all right, well, am I prepared now to go from an area of where I'm profiting all the way back down to accepting a loss of 25 and 25 cents? Your answer should be no, which means that what you're doing is you're ratcheting up your stop. So you risked, you risked 25 cents. At the very least, you're going to move your stop up to break even, which means that you're not going to risk any more than your initial trade. So $1. And as that dollar becomes $1.25, $1.50, you are locking in your profits such that as it makes its way back down to this level here, you will have been stopped out, because at this stage, you're going to be at a loss. Now, at that point, if you've been stopped out at break even or at a mild profit, you can now rationally reestablish your outlook by watching how it plays off of this key support level. And what I mean by that is if you see some consolidation, as we saw happen here and happen here, here, then you could be comfortable that, yeah, maybe this thing is going to continue, and you could put another position in play. But a break below this level here now is going to require you to reassess your overall outlook. So you're able to sort of step back through your whole trade management approach and recognize that you've played into some higher highs, you've at the very least you may not have profited, but you're not going to allow this breach of a support level to separate you from even more of the capital, even more of your profit or more of your initial capital than it already has. Okay. Again, hopefully that clears things up in that respect. Okay. And again, and as you really have to step back, and as we play down into these key levels, you have to be patient. You have to let the market suggest to you that, okay, I'm comfortable at this level, A plus B plus C is happening. Let's now look at reestablishing a directional bias. So it's not about trying to, as they say, catch a falling knife. It's about watching and allowing the market to sort of bring you back in based on your, your technical observations and your investigation of the price chart. So as we move forward here, again, the entire approach to trading using technicals is about establishing probabilities. So we don't just simply rely on the price charts themselves. What we want to do is we want to add some confirming indicators, and this helps us identify strength and trend, and it helps us identify momentum. So we're looking at a number of different... Oh, sorry, did you have a question, Steve? Oh, hello? Okay, I'm just going to carry on here. I'm not sure what happened there. But we're looking at a comparison of signals to confirm our market outlook. And there are literally hundreds of confirming indicators, and for a lot of people that are just sort of establishing, their trading accounts and trying to learn the dynamics of trading, it can become a little overwhelming. Recognize the foundation to success is not what indicators you're using, it's how you're managing your positions and how you're locking in your profits and managing your losses. And I know it sounds very simple, but that's really where everybody should be focusing on. Now, we've got a couple of sort of favorites that we always try to incorporate. We've got our MACD and we've got our relative strength index. And basically what we want to look at doing is we want to look at adding these particular things to our price chart so that we can, again, just to go back to that CSI analogy, start building some clues. And again, success in the markets relies about putting probabilities in our side. So we use our patterns and indicators to help make educated decisions based on, the activity of the markets in the past. And what we want to do is we want our lower indicators to confirm what we're seeing taking place in our price charts. And if everything agrees, then we've built a case and we have a higher probability of being right.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.